you know.
I love it.
You know, this guy, watch out for him.
Thank you,
Go ahead.
David.
Kim, go ahead, please.
Okay, well, thank you everyone for being here. We have such a great crowd today. There's a lot of us here and we have a jam-packed meeting. There's a lot of information we want to get to. So our first guest is Nicholas, and actually, David, it'd probably be appropriate if you gave him a little introduction, being that you were the one that connected us.
Except being his manager and the potential or possible modeling and everything else, we'll put that to the side. You know, this gentleman and I think it was one of the listings that we had, where it was the gas station, the car wash, out in the South Bay area, right, Nicholas? You
Yes.
to us.
Yeah, in
And,
Torrance.
we kind of got into it, and you said, look, you know, I'm interested in getting more information. We might be interested or, you know, have someone for it. But then I said, what else do you do, Nicholas? And he, you know, he was nice enough and got into it, and he gave us a really nice background, very short, you know. People usually give out like 20 pages, and he was like right to the point. He gave a 1 page, and I get his beautiful emails. Not only that, you know, they're involved in acquisitions and dispositions, but also he could be a great source for property management. And that's when we set up a meeting with me and my team here, and he came in and kind of gave a quick rundown of what they can do, what they cannot do. So I'll have Nicholas kind of explain the background and what they can do to assist some of the agents out here if they're looking, obviously, for property management. And also he'll tell you, you know, the couple of properties that they're after, which I get emails from time to time. And Nicholas, keep doing that, because that's how it's in everyone's head, that as soon as they get that, what you're looking for, guess what? They're making you the first call, right?
Exactly.
So without further ado, I'm going to have Nicholas, the handsome man, get into it, get on with it. And thank you for joining us. Go ahead, Nicholas.
Awesome. Well, David, thank you for the intro. Kim, thank you for reaching out to me and helping me get this set up. So kind of leading off of what David said, to give you guys a quick little background about myself, and then I'll touch more on our companies and what we're doing. Myself, I've been in the real estate industry for 7+ years now. I come from a family office background. I worked for a family office for several years on the acquisition side, managing their current existing portfolio, which consisted of shopping centers, triple net properties, and mobile home parks here in Ventura County and Northern LA County. I worked with them for several years, and then went out and formed and partnered with my two partners now, Ed Merrick and Darren Hill, on our development firm, Marhillis Ventures, and our property management firm, which is essentially a separate arm of our development company, OTS Property Advisors. To give you guys a quick background on Marhillis Ventures, we are a build-to-suit developer. We work with brands like Wendy's, Taco Bell, Jiffy Lube, Take 5 Oil, Sunday Car Wash, and Surf Through Car Wash throughout California to help them identify sites and build sites for them from the ground up or redevelop existing sites. But what I wanted to talk today about is primarily about our property management business, what we're doing here in California, how we might be able to help out your guys' current clients, as well as might be able to help out you guys too, and refer possible leasing opportunities that we know of the properties that we manage, because we don't do any of the brokerage side of the business. We just do more of the essential asset management side of the business. I'm going to share my screen. Kim, does it allow me to share my screen, by the way? Let me see.
Yes, yeah, you should be able to.
Okay, 1 sec. Let me do this real quick. Let me know once you guys can see this.
Yep, we got it.
Cool. Let me just do this. Can you guys see it still?
Yep, we see it.
Cool. So basically giving you guys some background about our company. We've managed properties through a separate entity called Capital Real Estate Advisors. That was in place prior to our rebranding that we did this past year. We rebranded it because we moved some systems over. We've updated our internal marketing and our internal management platforms on the financial side, as well as the tenant servicing side of things. So we've managed properties throughout California and Nevada for 20+ years. We continue to provide high level, high quality property management services. We tend to bring the asset management approach to property management without charging the same asset management fees, keeping it all kind of one box that we're able to provide more value than what we charge necessarily. We serve locally, regionally, as well as national clients. So we work with the Social Security Administration out in Pomona on a couple of their buildings that we just signed up actually this past week. And we work with private investors, institutions, everyone in between. So some of the properties that we manage, to give you guys an idea of the types of properties that we're taking care of, we do anything from your very simple single tenant, triple net lease Burger King and manage the financial reporting. So we, rent collection, managing any kind of CAM reconciliation that needs to take place or anything like that. We take care of that all the way up to your 100,000 square foot living, breathing shopping center that has modified gross leases, double net leases, triple net leases. You have CAM reconciliations, daily cleanings, all that stuff. We handle everything from as little as 1,000 square feet to as large as 100,000 square feet. Our main property types that we do manage are retail, industrial, and office. Those are our only three that we manage. We do not do any residential or any multifamily. We are strictly on the institutional side with the retail, industrial, and office properties. So anything from single tenant to multi-tenant. That's the kind of properties we manage. We do it in California and Nevada. We've primarily been in SoCal for the time being. We have offices in El Segundo, California, an office up here in Westlake Village, California, and then we actually have an office up in Incline Village, Tahoe. One of our partners is up there, and we have some people out of that office as well. So we kind of have spread it ourselves across the board. To touch on kind of what makes us unique from other groups, going back to what I explained with our development firm, Marhillis Ventures, both myself, my partner, Ed Merrick, and Darren Hill have a combined experience of 60 years in the real estate space. We have experience on the investment, the finance, the management, and the development side of things. We have another sister company that is not tied to this company called West Bay Capital. West Bay Capital is a bridge lender that does bridge loans across the US for build-to-suit developers, people that need emergency financing, all that kind of stuff. So we come from a lot of different experiences, not only from the lending side and the management side, but also from the development side. So we come from ownership ourselves. And what makes us unique is that we bring that to the table with our clients. We help advise them on how to maximize the net income for their property and make sure that they are enforcing all the leases and doing everything that needs to be done to have a well-oiled property that is turning them income every month. We also leverage technology very heavily. We use our own proprietary AI software that manages tenant and landlord requests instantaneously, so that when a request gets sent through, we're able to manage that request immediately, effectively respond to it, and handle emergencies and non-emergency issues, as well as handle any kind of landlord requests. So whether it's small, large properties, we take care of every client the same. We make sure that they're top of mind and they feel like they have a hands-on approach. We're never going to get away from our hands-on boutique approach, and that's kind of what we've necessarily focused on. So yeah, that's kind of our quick rundown of who we are and what we do. So I appreciate, David, the intro and letting me come on here and talking to you guys about what we do.
Great presentation, Nicholas. Thank you very much. And the lending part also, I apologize, I didn't touch on that, but so, it's a kind of a one-stop shop with Nicholas. And now, and the other thing, one of their offices in a ski town, which of course, me being a skier, but he's fired because he doesn't have it in Park City, Utah. So I comment on that, or Colorado, but that's where Britt Nilsson comes in. Britt, don't get upset. We'll kick his behind. We'll get to that in a minute.
Hey, that sounds okay though.
There, exactly. We'll take it. Any questions by any one that's on this Zoom meeting for Nicholas and his team?
I have a quick question, David. Thank you, Nicholas. When did you guys transition to have an AI kind of support system or whatever you frame that system as. It sounds interesting just because I kind of predict almost every industry to kind of end in that kind of level, especially if you have interaction or online interaction with consumer. It's very interesting, curious to hear about that. Thank you.
Yeah, so we started doing that towards the end of last year. And really where the AI comes into play is, every property has their vendor list that they use. And so a big part of the delay in managing requests and getting them fulfilled is getting feedback from your vendors and saying, hey, where are the quotes at? Where are we at pricing wise to, let's just say, repair an HVAC, for example. So what we've done is we've incorporated AI so that when a request gets sent through our portal, it automatically looks at the lease, which we've abstracted and defined who the responsibilities are of the landlord and what the responsibilities are of the tenant. It will determine that responsibility. And if it's under the landlord's responsibility, it will go ahead and send that to us. We will approve it or deny it. If we approve it, it automatically sends out emails to all the vendors requesting a quote for the certain repair. We'll add a little bit of notes on it, and then we will wait for all the quotes to get back. We'll be able to look at all the quotes, accept them, and be able to send the accepted quote to the vendor. And the vendor manages it all through our system. So they take a photo of it and they capture everything in our system so that we don't lose track of it. So that's kind of how we started to implement. There's a lot of other ways that we could do it, but right now we just saw that that's like the most effective way to utilize AI and make things more efficient.
Awesome, thank you.
Yeah.
Great job, Nicholas. Thank you very much.
Thank you.
Really appreciate your time, man. And I know you're busy and, you did a great job. Thank you. Any other questions by anybody else on the Zoom meeting? All right. Kim, you go ahead if you want to comment, or I can kind of go on the.
No, I think you're good to go. I see your next guest, Justin, is here, so.
Great. And we're going to move forward and have a quick lending update. One of my favorite banks, as I mentioned last time when Justin was on, we have Mr. Justin Myers from First Bank. We actually, before Justin gets going here, we have an event that we have set up with their assistance, which will take place on September 7th. And I'll leave it at that. But if you guys look, you get my emails, just please mark that date down. And this is a kind of a all-day event that will be put out by the Greater LA. I'm the chair over there, and I decided to put this together, and I think everybody will enjoy it. I will not give more information until we have everything all squared away. But September 7th, it will be from the morning till about a late afternoon, and it will involve First Bank. So we'll leave it at that. Without further ado, Mr. Justin Myers, he is with First Bank. He will give us a quick lending market update. Justin.
Thank you, David. Definitely appreciate the time that you've allotted me today. Good afternoon, everybody. Thanks for giving me your attention. Truly appreciate it. I was on here about a month ago. We're talking about our different lending programs that we have in terms of commercial and what's to be expected in the market in terms of that. I think everybody, or the topic that's been on everybody's mind as of late, is where are rates going? There's been a lot of talk in regards to the Fed funds rate increasing as of tomorrow, 1/4 point. Essentially, I'm on here today to kind of give you an idea of what that means for you, what it means for the borrowers, your clients, and essentially what that means for the commercial real estate market in general. When it comes to number one, I think it's really important to go ahead and kind of get an idea of what the Fed's fund rate impacts. There's a couple of different indexes when it comes to lending. The Fed funds rate actually pertains to short-term lending, lines of credit, bridge loans, some construction loans, and very few long-term lending vehicles, like an SBA 7A is tied to the prime rate. And that's essentially what's being raised tomorrow by 1/4 point. So the way that this works is the Fed's fund rate is currently at 5 1/4. That relates to the Wall Street Journal prime rate, which is currently at 8.25. What that is the Fed actually lends to banks at 5.25, and then the banks in turn add a 3% margin. And essentially that's what they lend out to their clients. Their best clients get that 3% margin. Some with worse credit scores get it a little bit higher. So essentially that's what is impacting short-term lending. What that means for your borrowers are the people that own businesses, whether they have a line of credit for inventory, payroll, or accounts receivable. Their existing debt is getting a little more expensive. What that means in terms of lending for commercial real estate, when we do our calculations to determine their lendability, it just makes it a little bit harder to go ahead and get them qualified because their existing debt just got a little more expensive. So in terms of getting a qualified DSR, debt service ratio, it just makes it a little bit tougher. But in terms of what it means for the actual rates pertaining to commercial real estate, whether it be a 5-year balloon, 10-year, 7-year, or even say a 30-year residential mortgage, they don't necessarily correlate in terms of tomorrow's rate increase. As a matter of fact, the treasury indexes are essentially the indexes used for any sort of long-term borrowing, like I said, whether it's a 5, a 7, a 10, or even a 30-year. In this screen that I'm sharing with you folks, I have the 5 and the 10-year yield right now, the treasury yields. And as you can see, over the last 3 months, they have increased slightly. However, at the beginning of July, they did peak, and there was some news that came out in terms of the economy in early July that was a little better than expected. So you see a little bit of a decrease from the beginning of July to where we are right now. But in terms of where the indexes are compared to, say, 3 months ago or so, you're looking at probably about a full point higher. Just so your information, so you know what it means in terms of what those rates will look like. If the 5-year treasury is at 4.13, typically you're going to look at a margin of 3 to 4%, depending on the deal, depending on the lending institution. And so that rate would actually probably be in the area of 7 to 8%. And the reason why that margin actually is a little higher than it has been in the past, that's because the quality of borrower has actually decreased, unfortunately. Because debt is getting more expensive for business owners or people that own buildings, banks are looking to go ahead and look for the best possible borrower and actually the best possible return in terms of their yield on the loans that they're doing. So typically, say 6 months ago, you would find that 3 to 4% margin probably be more on the lines of 2 to 3%. But because liquidity is getting a little more scarce, banks are looking to go ahead and increase their ROE dramatically. Typically, the target in the past would be anywhere from 15 to 18%. Now they're looking at a little more 20 to 25%. And the only way to do that is to increase their margin on the indexes. So that's just a quick update on where the market is heading in terms of lending. Are there any questions? Be more than happy to go ahead and answer.
Great. Any questions by anyone in our Zoom?
Justin, how do you see the rates going to be in 6 to a year?
There you go.
So actually, the forecast on that is dramatically different than what we are right now. In about a year, I don't want to give a definitive number in terms of what those rates are going to look like, but they will be better. That's what everybody's forecasting right now. We just got to get out of the woods per se, and get some more positive data coming in. One thing I did not mention in terms of the treasury indexes, they do fluctuate on a daily basis. And there's several factors that kind of come into play in determining whether those treasuries rise or fall. Those things can be inflation, they could be the jobs report, they could be CPI. And so whenever that data comes out on a monthly basis, then you'll see a big swing in the treasuries. I think even more important tomorrow than looking at the 25 basis point increase is kind of seeing what the wording is that Jerome Powell uses in terms of what he thinks about inflation, what he thinks about jobs, and that will kind of indicate where things are going to go long term. By long term, I mean about a year from now in terms of where treasuries are. So not to give you, I couldn't really give you the definitive answer, but things will be getting better.
Good news.
Justin, I had another question. Is the liquidity good in the market? I mean, is there banks are liquid, have a lot of money, so if they feel at
That-
ease,
good-
they would lend better? I mean,
That's actually a really good question. Liquidity is drying up in the market. So I have several peers at other institutions. Some other institutions are no longer doing commercial lending. Some institutions are not doing investor lending. They're only focusing on owner occupied. Some institutions are doing everything, but at the same time, they're getting more expensive in terms of their rates because they know they can. So the more liquid the bank is and the better capital ratios they have, the more that they're going to be able to go ahead and lend. But at the same time, too, they're becoming more selective because they know, number one, that they can. And number two, the number of quality borrowers out there has actually dried up significantly over the last 6 to 8 months or so.
Justin, how does that translate to the construction lending?
So construction lending typically is going to be done through short-term capital. So that's actually where your Fed funds rate or the Wall Street Journal prime rate is going to actually come into play. So those rates are going up tomorrow. They anticipate at least another 25 basis points sometime throughout this year. They have not forecasted beyond that. So yes, construction loans are getting more expensive.
Yeah, Justin, just to add to construction loan side of things, to give you guys an idea on our debt fund, that's what we do a lot of, is build to suit construction financing. And compared to this time last year, our rates last year were in the, call it 8 to 10% range. We're in the 12 to 13% range now for where our rates are when we go out and give high leverage build to suit construction financing.
Yeah, and that makes total sense. I mean, when you have the actual Wall Street Journal prime rate currently at 8.25, the lender needs to ensure that they're getting a solid ROE in regards to that vehicle right there. So a margin of 3 to 4 makes total sense.
Yep, and that's exactly what we use too. We use the Wall Street Journal prime rate.
Yeah.
I have a question.
Sure.
I know a lot of commercial buildings are selling, the occupancy is down. Is there, or do you think that there will be a trend of some of these commercial buildings being converted to multis? Because I know some of them, their LTVs change with the values and the rates and everything. So do you see anything about that?
You mean some of the larger commercial buildings being converted from, say, office space into multifamily? Is that what you're referring to?
Yeah, and I know that there's the issue of zoning and permits and stuff like that, but is there any kind of trend like that, or do you see anything like that happening?
That's been the conversation. So a number of very large offices, specifically in downtown that I know of, where the lenders have actually taken back the keys from the borrowers, and now it's up to the institutions to kind of devise that next step. Do they sit on it and hope and pray that things get better? Or are they able to go ahead and demo and rebuild? Or can they kind of, work with what they have and make it work for multifamily or maybe mixed use? I don't think there's been a definitive answer of like what way a lot of buildings are going to go. I think we're just kind of stepping our feet into that right now and seeing kind of where that mess kind of gets us. But I mean, that's been a pretty hot topic in pretty much every real estate meeting I've been in for the last month and a half or so. So I hate to not be able to give you a definitive answer, but that's being worked out as we speak.
Well, I know you guys don't have a crystal ball. I just was curious, like, what the trends were. And then I know too that it's going to be more profitable.
Some are.
Yeah.
So some are.
It's going to be better than a commercial.
Yeah. So the smaller the building, the easier it is to go ahead and try and convert to multifamily or mixed use. Some of these really, really large, high rises in downtown, they're going to have some issues, obviously. And so I think you're going to see a lot of cooperation between municipalities and lenders going forward to make sure that these things just don't go to waste. And obviously we have a huge housing need, specifically in Southern California. So I think we're just getting into that right now.
If I may,
that actually leads me to another question about that, is that I would think that lending on a multi might be a little easier right now than a commercial building.
Than an office space?
Yeah.
I mean, I think it just depends on the quality of the tenants. Like I was working on an office out in San Bernardino County where the two anchor tenants are actually government municipalities, and the leases are very strong. So it's something that we're definitely interested in. So I think it just depends on the lender. Like I said, there's some lenders that don't want to touch investor whatsoever. There's some lenders that stop doing commercial, and there's some lenders that are in a good position that, you know, they're entertaining everything, but they're being picky.
Okay, thank you.
Justin, how is
Guy-
the
Oh, go ahead. Go ahead to the question. Go ahead.
I'm so sorry, David. Justin, how is the situation on industrials? Are they lending easier on industrial spaces? Just wondering.
Yeah, industrial seems to be a really hot market, actually. Finding warehouse space, industrial space, that seems to be an area that has actually done very well. Specifically for us, actually, we've done a lot of lending in terms of industrial space. So I actually don't see that slowing down anytime soon. The one caveat I will say to that is, you know, I have a pretty wide array in terms of my book of business. And so I talk to a lot of clients that are in the wholesale area or even in the retail area that have warehouses. And they have told me that obviously business is down. Not only is business down and production down, but also the number of shipments coming from overseas in terms of the ports and the large crates, that's down significantly. So I think that's a telltale sign of maybe what's to come. But for right now, in industrial warehouses, that sort of thing, that hasn't been impacted too much. That's actually been a really good silver lining or shining star, I guess you could say, in this time.
So Justin, I have a client who is very much looking into industrial, let's say 15 to 20,000. What should I mean, just in a nutshell, what should I tell him that he should expect the interest rates to be, let's say 30% down, you know, just very roughly any.
Probably looking at, probably looking anywhere from 6.5% to 8%, depending on the term itself and the way that the deal cash flows. Obviously, I assume it's going to be owner occupied, so that's a little more favorable. So the institutions are typically going to be willing to go ahead and take a smaller ROE versus an investor property. But yeah, I mean, for instance, if you look at the indexes, the charts that I had shown on the screen. For instance, the 10 years at 3.86, if you add a 3% margin to that, you know, you're looking at the high sixes. If you wanted a shorter term balloon, like a 5-year at 4.13 currently right now, you add the 3% margin, you're looking at the low sevens. So I think it'd be okay to tell them anywhere from 6.5% to 8%.
Thank you.
Any other questions?
David, if I may just jump in on
Absolutely, Mr. Britt Nelson.
On the office conversion, is that I'm also associated with VTBS Architects in Santa Monica. And we've got 4 buildings that are under contract with Douglas Emmett. 2 of them up in Thousand Oaks and a couple others up in the Warner Center. And we have been looking hard at those buildings and that he has. And some of these are mid-rise for him, and 3 out of the 4 we're going to convert. Now those are on hold just due to the fact of the current market and the rates that Justin was just talking about. But that is a conversation that is happening not only out there, but also here in the Denver market. And different companies are moving forward in that direction too, just depending upon the floor plate size, how the mechanicals are placed, and so on. Sometimes it does make a difference to go ahead and do those conversions. Others, it's a scrape and redo. And one of those we're doing with RBM, just in the West LA area. And RBM is actually going to be doing a scrape and redo of one of their office buildings that we're going to redesign. So I hope that it helps answer the question a little bit better.
Great, great point, Britt. And I got to tell you, all of you guys, working with a potential seller or a buyer, you know, when you're coming in and you're trying to underwrite and giving a valuation, obviously we all know the interest rate, you know, plays a big role. your pricing last year compared to today, I mean, it's an adjustment. Any principal that's thinking it's the same price as last year, I mean, they need to be educated. And you may want to get a banker like a Justin, or, you know, I mean, you know, if it's not Justin, it's somebody else at a bank that you really, I mean, they know their stuff. You want to get them involved and have them hear what's going on. Okay. And as we heard, and correct me if I'm wrong, what I heard from you, Justin, is that the lending side is going to be more of a, you know, you have be more affected than just a regular purchase on a commercial property, investment property. Am I right?
Can you go ahead and restate that? I'm sorry, David.
The question is that someone that is looking at interest rate today versus tomorrow, because we're going to have an increase tomorrow, most likely. If they're buying an investment property today, okay, tomorrow when rate goes up on an investment property may not make a change, but on a, you know, development, it will make a change, is what I kind of heard.
Correct.
So anyone, and I know there are few, you know, of course we are involved in one side and we're about to pick up another possible site that when I sit down with the seller, now that I hear this, and thank you for all the info, Justin, that's going to make me price it a little bit more, you know, I mean, it's going to be adjusted a little bit lower because the cost of borrowing is going to be more. I know people that I see here, Debbie, I think she has a site out there on the market. It's a development site, and she's done a great job getting the word out. Others that are working with any, you know, development opportunity. I think that's, you really got put aside the cost of construction has gone up, but the lending is a big, you know, thing there. David, I know Omid has, you know, talked to you earlier, but we'll talk about after this meeting, you know, that anything development, I mean, it's, you got to really price them, you know, right, especially with the, you know, the financing where you know, where we're heading. So thank you very much for all the information. Jason.
Yeah, thank you. Hey, Justin, great information today. Would you be willing to do a conference call or a Zoom call with a client of mine trying to talk off the pricing cliff here? Would you be willing to do that?
Yeah, I'd be more than happy.
Okay, great. I'll get your information from David.
Perfect. Thanks, Jason.
Justin, if you can put it on the chat. I think we had it last time, but if you can put it on the chat, and that would be great. So everyone that's on, they can get your information. And definitely, Jason, I think that's a great way of doing it. And a lot of people like, you know, well, I don't want to be the messenger. I want the person to, you know, be on the line, or we go into meetings, whether it's Zoom or face-to-face, have Justin there or have this bank there. That's perfect. That's the way you should do it. You know, you're not making it up. Here's the source. Here's the institution. Here's the lending institution. Here's the bank. Yeah, and I think
we're gonna have the tax attorney and the banker on the line and get some tax mitigation and get her to come down off the price and see if we can get a deal done.
Whatever it works, absolutely. Any other questions? Any other comments, questions as far as financing? Anything for Justin? All right. Justin, thank you very much. We really appreciate your time. Keep up the great work as always, man. And please give my regards to the whole team. I will probably see a couple of them on Saturday.
Yeah, I'll see you Saturday.
Oh, you're going to be there too? Okay, well, there you
sir.
go. All right. Well,
all right.
Look forward to it. And again, guys, we will have an event again with, you know, obviously with the bank that Justin is affiliated with. We'll be on September 7th, and it will really be a fun event. And again, more information to follow. So please be in touch with Justin on any financing, banking, and thank you again for your time.
Thanks, folks.
At this moment, Britt, anything else up in the Denver market? Anything that you want to share before we go to our next presenter?
The only thing I would share is thanks for having me, and thanks for allowing me to tag along with you guys. I greatly appreciate it. And you know, us here at Stucy Commercial Properties, again, we do a lot of things in the Front Range, and from land sales to buying land, selling land, tenant rep, landlord rep, we do it all. But right now we're very restaurant focused with the QSR modes. And so right now I don't have any listings. I'm more on the tenant side trying to find space up here for different types of tenants. Flex office in the South Metro market seems to be the call. There is not a lot of it available. And so I'm actually probably partnering with a friend of mine that's going to be, we're possibly doing a build-to-suit for a couple clients. So stay tuned on that. But whatever help we can give you out here in this market, please let me know. And I travel to Southern California quite a bit as well for, as I said, for VTBS. And so I'm all over. So holler at me if you need.
And he is all over, and every time he's come down here, we tried our best to get together. And really, I believe in the face-to-face interaction. I know we have the Zoom, we have the phone call, the email, but I had this discussion with somebody at IPX, and he's up in Denver, of course, and because I'm going up there and probably team up with Mr. Britt and his son, possibly on a whitewater rafting, ziplining adventure. But what I told Tracy Wilson from IPX and her, his counterpart, Danita, said, look, I made this day part pleasure, part business. And, I do my best to cover all my grounds, but it's always more effective when you meet people face to face, and not only in business, but people that you do business with. Okay. And that's just the old fashioned way, man. Enough of doing doing the email, send me a text and maybe the Zoom, but that face-to-face interaction, whether you're working with a principal, you're representing them on a sale or a purchase, or agents that you're working with that we see right here, try your best to get together with them, high five them, go out for a drink, coffee, breakfast, whatever it's called. And it doesn't matter where it's at, try to make time. Believe me, it will make a difference. And I could be wrong, but that's the way that's the way I roll. And that's just my suggestion.
Very good, David. And I wholeheartedly agree, my friend.
You got it. So thank you very much, Britt. Thank you. And please put your information on the chat. So everybody, can, they may have they may have investors or, owners that they represent up in the Denver or the market, and they may have space for you, you never know, deals could be made. So thank you.
You're welcome.
The next presenter, I had, it's funny, approximately 5 years ago, I was at the KW Summit. Like, we have one coming up on August, I think the weekend of August 11th up in Austin. This was in San Antonio. On the way up, I'll never forget, I was going to Italy. So I had, I said, what, let me see if I can maneuver it and get my ticket to go through San Antonio, do the summit and then go to Italy. It was a nice event. I had a pleasure of meeting this gentleman, Eric Roark, who's on our Zoom. Eric is from Durango, Colorado. One of the things, and I mentioned this earlier, is that these emails that go out, I know a lot of people look at them and they delete them, but when I see it continuously, it's kind of like Eric. I know Eric. Eric is Durango. Eric Roark from Durango, Colorado. So if I need to do anything in, Durango, which is about 5-6 hours away from Scottsdale, this is the guy. Here's the guy that I will, call. I met Eric, and, he gets my emails, and he saw me presenting at that time. And Eric, thank you very much for coming in and, letting us know why Durango, Colorado. I know a lot of people are trying to get out of, California, get into other markets where it's Colorado, Utah, Florida, but please let us know why Durango, Colorado.
David, thank you for this opportunity. And I want to say hello to all my Los Angeles friends. I've spent a lot of time in Los Angeles. Prior to getting into real estate, I was a college football coach for like 36 years. And when I saw David for the first time at that real commercial summit, it was just such a great presentation. And so I got big shoes to follow on here. But I do want to say, like Los Angeles, I have spent a ton of time there. You know, I had a lot of nights at the LAX Marriott, and I spent a lot of time in Calabasas. But quick story, real quick. When I was coaching, I used to bail Matthew Stafford out of the drunk tank when he was in 9th grade. So anyway, that's my Los Angeles story. But anyway, why Durango? Anyway, I've moved here to bought a home here about 12 years ago because I really wanted this to be my final destination. And because it was just such a resort town. And you compare like Durango to some of the other, ski resort cities, we have a milder climate. We're on the southwest corner of the state, and we can, it could be like sunny and, really nice. And then we can drive 15, 20 minutes north up to Purgatory to go skiing. And so here it's not just a ski resort, but it's a all around 4-season resort. There are summer resort activities right now. You got whitewater rafting, fly fishing, camping, backpacking, hiking, just all that stuff. We are averaging about 100,000 a month in tourism. We have a train called the Durango Silverton Railroad that is really, really famous. We do have a lot of second homers. So like back to my point, like why Durango? Durango, to begin with, we're about 60% public land. So probably less than 40% private land. So that's going to put a really premium on residential areas. So our median price point for single family residential is $1 million. And what that impacts is, the reason I'm saying that is because that impacts like the commercial industry, your workforce housing. So they go out to different places like, we got a small town nearby called Bayfield. And we've got another couple of areas that are really trending like for affordable housing. Our local government, our city and our county, they're really trying to do things very, very well as far as, having incentive to investors to get into affordable housing, whether it be, single family development or multifamily. Also, the retail here is just not very good. It's like at a 5% cap and they're not getting sold. And I've got these investors coming in, will find me something like at an 8 cap. And they said, I can go to Charles Schwab and get a money market account for 5%. So, the retail here is just not very good. What is good is, is high demand is hospitality because of our $100,000 a month for tourism. And so many people are coming here. Now, one thing I would want to add, like for the summer, we have a lot of people, that come up here. So like the second homers, say California, Texas, Scottsdale, they will go back, to their places around Thanksgiving, and then they'll come back, say around Easter. So our winters here are pretty short. Durango is not a high density area. For example, my office is like on downtown Main Street. I can walk to a closing. I can walk to a bank. I can walk to eat. I can walk to get a haircut. I can walk anywhere I want to walk. And yet, we're 30,000 full-time population, probably about 75,000 in our county, and which is just really remarkable. One thing that might be a good opportunity here as well too are restaurants. We've had restaurants on the market. I mean, I'm talking about really, really good restaurants that have been on the market for quite a long time. And, the restaurants are really having a tough time. The QSRs, they're having a tough time, particularly for us because of the lack of affordable housing, and which I think would be pretty good later on. A lot of in the QSRs, a lot of the dining rooms are closed and the drive-throughs only are open. And that's probably due to the lack of workforce. Another reason, like I'll top it off, like why Durango, with us being so small, the one thing like the pandemic taught us is that you can work remotely. And so once that happened, people were just started flocking here. They're really getting out of the big cities, all the stuff, the congestion. We have really, really low taxes. I actually have a home in Dallas, and what I pay here 1 year here in property taxes, that's what I pay like 1 month there. So I know what all goes on in the big city. I'm happy I'm out of it. And that's why a lot of people are coming to Durango. And I really believe that there's a lot of really good opportunity. We got areas that are trending, and again, particularly for hospitality, 1031 exchanges, opportunity zones. We have all that stuff. And so, if I can enlighten you and educate you more on Durango, I put my contact information in the chat box, and please feel free to reach out to me. And but it's a hidden gem, and the reason I came here, because I really felt like it was the end of the rainbow. After 14 years, it was I've had enough moves. So anyway, that's Durango in a nutshell.
Hi, can I ask you a question? It was
Yes, sir.
interesting that you mentioned 60% of the lands over there is public, right?
Uh-huh.
And for us in California, this is a little bit unusual. Do you think that they may release this as like the need is coming up? I mean, will they? I mean, it's very interesting.
No, because what they are, it's national forest, it's state land, conservation easements, all that is forever. So that will never happen. The only thing that I've seen done differently, like over in Pagosa Springs, was a land swap with the national forest. I saw 2 ranchers do it. There was a guy named Red McCombs. He was going to build at a ski resort called Wolf Creek, and he did one, and that really turned out to be real chaos. But the only thing I've ever seen was land swaps. So no, they will never ever those national forests and public lands, that's forever. And I think that's probably made one thing that's been attractive, that's attracted people to come to Durango. And great question.
And you said the average median price is $1 million?
Yes, for here.
Wow.
Because and that's for single family. And
yes.
So there's a town about 18 miles away called Bayfield. They're probably about 400 to 500, and it's 18 miles away, and they're commuting. And then we got this other area called Three Springs. It's where the major regional medical center is, and there's a lot of subdivisions going up, and subsequently commercial property that's really making this area grow and expand. So when I see a lot of going out there, it's going to be like maybe some QSRs, a little bit of retail. They have trails, parks, for walking, biking. It's a real beautiful area, and it's a little bit more affordable, and it's real close, right next to the hospital. So that area right now of Durango is really trending.
Eric, one last question. Does anybody buy these houses and Airbnb them or rent them to the tourists? Just wondering.
Yeah, we have a lot of that. Absolutely. We have a lot of that. Now, what you have to do is you have to make sure like what your zoning is, if it's pre-approved. Most of the time it's going to be a little bit more rural area. And if you're in the rural area, you can get less than $1 million probably. Yeah, the Airbnb, because like I have about 3 friends that are property managers. Again, it's a small town. I know every one of them. And they do that like on a full-time basis. They represent people. I got one listing now that's a ranch, and they have 1,200-foot of an ADU above a barn. And they rent that out for like $200 a night. But, you need to make sure, like, before you do your due diligence, that, the zoning and all that stuff was going to permit VRBOs, short-term rentals, et cetera.
Of course, thank you.
And a great idea.
Eric,
Thanks for sharing, Eric. And just wanted to jump in, David, if I can.
yeah, no, great. I was gonna actually go ahead. I know, go ahead.
No worries. That median price doesn't surprise me, because the median price in the house of a house here in the Denver metro area is about $7 to $7.25. And so then you look at a ski town like Durango, where I used to live back in the 80s, and a Fort Lewis grad. Fort Lewis College is down there, guys. And so up in, at that point, it was just, it was an up and coming area. Now it's truly grown tremendously. But that pricing doesn't surprise me at all at $1 million. And one question I had for you, Eric, is how is Tamarron in that area? Is it still pretty bustling?
It is bustling, but there's like recently, they're fully occupied, with the short-term rentals, and particularly in the summer, they may have a little bit of downtime between, just say that Christmas break and spring break window. They get really, really high prices, during the holidays and spring breaks, the rentals do. And then, of course, in the summer, there's like 3 golf courses up there, and they got lakes and all the hiking trails. The Colorado Trail runs right in behind there, which runs from Durango to Denver, for some of you that are not familiar with it. But there's also just recently a bunch of new raw land that has come available, for potential, condominiums that could be investment property for skiing and ski out, but that's more of a development type of deal. But there's property that come up there quite a bit. It's Cascade Village, Tamarron.
Right.
I'm sure Cascade was around when you were around.
Yep.
And in fact, my boss, John Wells, owner of our group, he's a board of trustee at the fort, and my brother-in-law's the comptroller there.
Say hi to John. I know him very well.
Wow. Okay. I'll do that. In fact, I'll see him here in about an hour.
Sounds good. Tell him hi.
He's been a great mentor to me.
He's awesome.
Mm-hmm.
You got 2 fellow Colorado guys, man. How can you go wrong? It's Britt and Eric. I know you guys are gonna do some business. And in case you didn't know, Eric, I met Britt through one of these Zoom calls. And we actually met up, like I said, a few times. And he's the best instructor in Vail skiing. So if you ever go up, you need a private instructor, Mr. Britt Nilsson can definitely assist.
That is saying a lot if you're one of the top instructors in Vail.
He only does private, man. So I can tell, I skied with him, so I know what he's all about.
I just hung my license at Keller Williams in Edwards. And because I have property in Routt County and Pitkin County.
Sure. And I also want to tell everyone that I've had the pleasure of being in Durango with my wife and my kids. I've skied everywhere, but Durango is one of them. Purgatory is a place I skied, and it's a beautiful town. Skiing was great. And we had an opportunity to go hiking, and, it's funny, I still get emails from the hotel, come back, and when are we going to see you next? So great town. Anyone that haven't been there, please do. And of course, be in touch with Eric. And what I heard from Eric, kind of in a nutshell, retail is not the way to go. Although there are opportunities for people that may have a tenant, or they have buyers that are looking at buying things because they're closed down. What I heard from Eric, on retail, or it's sitting vacant. Perhaps they will pick it up at a good pricing. Contact Eric. Hospitality is what I heard from Eric. That's an opportunity. That's kind of a big market, right, Eric? Hospitality.
Yeah.
So anyone that's in hospitality, perhaps there are opportunities to kind of go that route. you got clients looking in the hospitality sector. And a lot of the guys here do retail and, land for development. So Eric, thank you very much for your time. Please do put your information in the chat box and people can be in touch with you. And Nicholas, I don't know if he's gone, but Nicholas, you may want to get in touch with Eric as well, or we can kind of talk, because I saw an opportunity for something that you were looking for. So Eric can definitely be an assistance to you. Anybody else have any questions, or if you have any properties that you've just listed that you want to give a shout out on, new listing, or perhaps you've had a price reduction and you want to kind of give a word out, please go ahead.
David, if I need to, I need to jump on another call, but thanks everybody for having me
Britt.
aboard again.
We'll talk.
Take care. You bet.
Pleasure. Anybody that has any new listings, don't be shy. If you got anything that you want the group to hear about, there's an opportunity, price change. Anyone?
I'll do one. In fact, since I'm on here, I'm going to send this out, but I do have 2 corner lots. It probably in the whole entire Southwest Colorado region, it may be the only 2 corner lots available. Now, it does have utilities. It is not shovel ready as of yet, but I'm going to tell you it's 26,000 traffic count, which isn't great. I mean, for y'all, but it's great for us. It's right across the street from the hospital, and they're building like a subdivision in behind my property. And then with our, we got stoplight, we already have turn lanes, so you wouldn't have to do anything as far as traffic. And they're both around the $1 million range a piece. So they're 2 corner lots are to be developed. It could be retail, QSR, gas. That would probably be the highest and best use. And when they finish the subdivision on the south side, this property will have a great walk sport as well too. Thank you, Dave.
What's the zoning on those, please?
It is commercial.
Okay.
I'll send it out.
Eric, could we ask you a favor? The 2, if you don't mind, you can maybe put that out there and everyone can look at it and they can call you with any questions.
Yeah, I'm going to try to.
Or you can just email it to one of us, to me or Kim, and then we'll get it out to the group, whatever is easier.
Yeah, I got 2 really nice flyers.
Yeah.
I'm not very good at attaching stuff.
And I would also encourage you to be at the ICSC meetings. I know there's a couple of them coming up just to help you there. There's one that's going to be taking place in San Diego. You may want to attend. We'll have the ICSC. That's in, I believe, September. There's one in October in Chicago. You may want to do that. And there's one in Florida, I think, just next week or 2 weeks from now. So look into it, icsc.org. Or anyone that is a member, of course, you get it. If not, if you're doing retail, definitely want to, be involved with the ICSC. So Eric, thank you very much for your time. I just want to take maybe 1 minute. We had 2 price changes on 2 listings that I'm sure everyone that's here perhaps have 1 or 2 people that you can call on. We have a single tenant. It's a great tenant. It's a Dollar General corporate, backing. Ones that don't know Dollar General, they're, kind of on kind of a discount slash, what do I say? Like a typical 99 cents only Dollar Tree. So this Dollar General is in Brantley, Alabama, just south of Montgomery. The owner wants to sell to move the funds here in California. The asking price was reduced to $925,000 just about a week and a half, 2 weeks ago. This is being presented at a true 7 cap on the asking price. In fact, an offer came in yesterday that we countered it rather favorably. Seller will sell, has to sell. So if you have anyone that's looking for a single tenant coupon clipper, as they call it, Dollar General that we have listed in Brantley, Alabama for only $925,000, 5-year lease with 5 5-year options to follow. They have exercised the last 2 options ahead of schedule. So that shows you the commitment by Dollar General to this location. And they've been here for over 15 years, okay? And the next opportunity is a single tenant restaurant that could be an owner user. It's a restaurant and a bar currently being occupied by a tenant who has a lease that runs out at end of August. They've been there since the 90s. This one is located in Covina, California, listed at $1,575,000. In fact, we're showing it tomorrow to an agent that has a buyer for it. So if you have anyone that is looking for a single tenant opportunity with the upside and rent, or perhaps a possibility to take over the business plus of course the real estate, I would highly recommend you present this. This is again a sushi restaurant they have on the ground floor plus a karaoke bar on the second floor, listed at only $1,575,000. Please feel free to call me or text me or call our office. Phone numbers, of course, 310-710-5626 or 310-724-8043. Anybody else has any properties, any questions, any comments? I want to thank everyone for attending this meeting, and please be in touch with your fellow agents. That the reason we do this is to create a kind of a synergy, create a ambiance atmosphere for us to do business together. But keep in mind the meeting, the face-to-face as much as you can is the way to go. I also wanted to point out we'll have an event that's going to take place August 24th in the evening for a good cause. City of Hope. There are going to be a lot of people in the real estate and the financing world. I'll have more information on that as well. That's the evening of August 24th. It will be here somewhere in the West Side. All right. Thank you very much, everyone, for being in this meeting. Nothing else. We'll say goodbye and look forward to the next meeting. Have a great day.
Thank you, everyone.
guys.
Thank you, Dave. Thank you.
Take care. Bye-bye.